Hi, this is Gary Wise with Good Life Luxury. I'm joined today with Jennifer Goodman, also of Good Life Luxury, and what we're here to discuss is capital gains tax, especially with respect to your primary residence. So, Jennifer, there's been a lot of confusion, especially amongst a lot of folks that we know. They're coming to us asking questions, what are the exclusions I can have? Am I going to get taxed on the property gains, on the actual profit that I make out of my residential home? And if so, what does that look like? And there's so much confusion out there, so let's talk about that.
Okay, I think that's a great idea. And I think the best place to start with is a little bit of a history.
Okay.
Because before May of 1997, there was a completely different opportunity for people who were selling their homes. Prior to 1997, if you sold your primary residence, that is the home that you are living in, if you sold that primary residence and you had capital gains, you could very well be taxed on all of it.
Well, how did you avoid that?
Good question. So you avoided it by purchasing a new primary residence within 2 years of the sale of that house.
But you had to roll over all of the money into the new residence.
You did 100% of it.
This is the IRS's way of trying to force you to keep the money in the market or get taxed for it. Now, things changed in 1997.
They did. In May of 97, there was the Taxpayer Relief Act, and that created a huge ease for the population as a whole, because what it did was it allowed for people to not have to reinvest that money into another property. In fact, you could take that money and do whatever you wanted with it.
Like buy a Tesla?
Like buy a Tesla, you could vacation, but there are limits, as you know.
Yeah, so if you're a single individual and you've lived in your house 2 out of the past 5 years, you have a taxpayer exemption of
$250,000.
And if you're married or you have a partner, it's $500,000. So there's a lot of details, and the devil's in the details when you start talking about marriage and partners and how long you've been in the house. We're not going to get into that. Reach out to us if you have specific questions. But the beauty here is now you can take those profits and you can do anything you want with it, and you can move every 2 years with 0 tax implications as long as your profit is less than $500,000 as a couple.
Yeah, it's a pretty sweet deal. So the Taxpayer Relief Act is a huge opportunity for people if they do want to move and can actually create wealth through that. They can then turn around and put it in their pockets and keep the IRS away.
Excellent. So thank you so much for watching. If you have any questions about us, just simply reach out and ask us your questions. Register below, and we're happy to answer any questions you may have. Thank you so much, Jennifer.
Absolutely. Thanks, Gary.